Hello, hello. Is anyone there? Is anyone there? It's gonna be a lonely stream tonight, I guess. Currently I think there's one person viewing. Or is that just me? Let's get on the chat. Where's everyone? Hey, Michael. Okay, we got 3 people. That's enough for me. Look at the success of my channel. Got 3 people. Anyway, got an audience. Let's get started. Alright, cool. Got Michael. Got Ihab Ahmed. Okay, cool. Yeah, alright, let's start. So, hope everyone had a good Christmas. Celebrated, had some fun, ate lots of food. I'm gonna get started now. I think there's a little bit of time lag, so you might have to wait a couple seconds. But so what I'm gonna look at today, I'm gonna look at some stocks. You know how I color code them. Let me go through them again quickly if you don't know. The yellow ones are the ones that I think could potentially be trades that could be taken soon. The purple ones are ones that are trades that I think could be taken now. And I'm going to go through a couple of these now. So obviously this is a mixture of UK and US stocks. This is my watch list. I change them as I go along. And I've got my screeners on the right hand side for any stocks that fit specific criteria based on the different screening tools that I have. I've got a couple of different screeners here. I use them to find new stocks. And whenever I find any stocks that I find interesting that I might want to add to my watch list, I'll take them from the screener, add them to my watch list. And here we go. So I'm going to start with Dollar Tree. That's a position I've actually taken already. I've taken a short position in Dollar Tree. Now, I actually spoke about Dollar Tree a while before. I just want to go through the thought process behind me and why I took a short in Dollar Tree. So right now we're on the weekly chart. Now, the first thing we can see right now is that there's almost like a kind of like an ascending channel pattern that was created. So as you can see here, it rose. Price was rising over time. So this dates back to like 2015. It was ebbing and flowing, but it was rising overall. Now what I see here is that at this price point here, around the 12,000 point, the 12,000 point, it double topped. Now when it double topped, sorry, I got an alert going on. I'll check that out in a second. So while it double topped here, that was one sign that it could potentially short, because what I would have wanted to see if I was here, I wanted to see it climb all the way to the top. So when it didn't do that, that showed the sign to me that it was like momentum was dissipating, because it didn't do that. So then I went looked to the MACD and RSI, and both the MACD and RSI showed a bearish divergence. So what I mean by that is that the MACD was making lower highs. It was still making highs, but each high was lower than the previous one, which showed also like volume was dissipating. And so did the RSI, showed me the same thing. So that showed me that price wanted to go up, but it didn't really have the push by the buyers to go further than where it had been before. So it looked like it got to this point, came back down, and then hit that point again, and then sold off again. So that was showing me like a bearish sign. That was the first bearish sign. So on the daily chart, I then went onto the daily chart, and I saw that. Okay, so I used Fibonacci retracement, and I'll try and explain it to you the best way I can. So from this top point here, I made a Fibonacci retracement from this top point here to this point here. So this point was like the lowest point at the time. So if you ignore everything that happened past, let me show you. If you can ignore everything that happens past around here, this is the lowest point. So I made a Fibonacci from here, highest point to lowest point. And what that showed me was that it retraced at previous Fibonacci levels. So it came back, it came down, retraced at the 23.6 level, came back down to the 100 level, and then it's just kind of ricocheted here. But this is going to be important in a second when I explain to you why. So right now it's showing a sign of selling off, retracing, selling off, retracing. So the obvious thing that you think it could do next is probably to sell off, then to the next Fibonacci level, which would probably be around here. So the next sell off would potentially be around this area. So that's something to take note of. So I'll draw a little box here. What have I done? I'll draw a little box here as a potential like profit zone based off of Fibonacci. Let me configure that. Now, the next thing I looked at, so this is all about confluence. All of these different things are telling me, different signs are all telling me the same thing. Now, the next sign I saw was that on the 4-hour chart or 3-hour chart, it doesn't really matter. On the 4-hour chart, I saw a bear flag. Now, if you guys don't know what a bear flag is, I've made a video about bear flags. I'll show it to you in a second. But a bear flag is when price sells off, makes like a kind of ascending channel pattern, and starts selling back off again. Now, the normal way a bear flag behaves is that it will come down, make higher highs and higher lows, and then some sort of channel before selling off again. And this bit was a really telling sign, because here it was trying to break out to the resistance line once more, but it didn't have enough power to do so, because it came up, sold off, came up a little, sold off, and then broke the support line. At that point, that was my point. At that point is where I was like, okay, now we need an entry, because it sold off and it's broken this line, and that's where I set my alert. This line was where my sell signal was going to start. So when I saw price break this line, that's when I was like, okay, now we take a short position. And the good thing about it is that the position that we take in the short position is a great position where the risk to reward ratio is really good. So you can sell into a bearish position, and your stop loss can be pretty tight. So I set my stop loss at not this high, but just the previous high before, just so there's a little bit of a buffer. So in reality, I put 25p per pip per point short position, then I put another 15p per point short position. So altogether, I'm in at 40 pence per point, and together I'm risking about £85, something like that. I'm risking £85 to make a potential, okay, who could do the maths here? What's the maths here? 350 plus 180, so that's 450, like 520, is that right? Something like that. Anyway, to make around £500. So imagine I'm risking 80 quid to make £500. So that's like a 5 to 1, 6 to 1 ratio, which is really good, risk to reward ratio. If I could tell you, if you could risk £1 to make £5, you definitely take that bet, because that's a favorable bet on your part. So that's what trading is all about. Make sure the risk to reward ratio is in your favor, so that even if you're wrong, you're only losing a little bit, because the next time round you can make something bigger. So that's the plan. The plan is, for me, I think it's going to sell off to this point. But this green area isn't just all about the Fibonacci level. I also found that on the daily chart, there was also like an expanding wedge forming. So all these different patterns are forming, and they're all telling me the same thing. The expanding wedge ricocheted from highs, lows, highs, lows, high, and each high was high, each low was lower. So the natural progression would be for it to sell off down to this point. And if you wait, let me extend this line a little bit. I didn't extend this line long enough. If you extend this line long enough, it all intersects at this point here. So the Fibonacci level intersects here. The support line for the expanded wedge intersects here. So we got two reasons why this should be your take profit zone. This and also Fibonacci, all telling you the same thing. So to me, this looks like a good short. And if I'm wrong, I don't care, because at the end of the day, I'm risking 80 quid. I could make a potential 500 quid. It may take a month or so to get there, but at the end of the day, I don't mind waiting. So that's why I took a short at Dollar Tree. What do you guys think of that? Okay, Will wants to look at ADNT. Okay, let me check ADNT. What do you guys think of my analysis of Dollar Tree? I actually took a position at ADNT a while back. I covered this a long time ago, but the only thing about ADNT looks actually, what happened was, I thought it was initially going to be ascending channel pattern. So what I thought was going to happen here, naive of me to think so, but was that price was going to hit this support, hit this resistance, come back down, climb, and then just keep going all the way up. But it didn't. It had its own plans. It came back down, sold off, came back down, sold off. And the thing about ADNT is that it kind of moves to its own drum, and I like to see kind of consistent patterns form. And right now, it's just kind of made. It's been going sideways for a good how long? 6 months. Ranging within the same area for the 6 months, and I don't really like that, because though it was ranging, it hasn't been ranging in any kind of orderly fashion. It's been going up, coming down, going up again, coming down, staying down a little bit, going up, and I didn't really like that. Now the 180 simple moving average is below price. It looks like it's going to be curving up, but as it is right now, I just don't like the shape of it. And to be honest, the way I see things is that, why trade something like that when there's smooth patterns that are going to give you easy to recognize trades? Because this has been doing a lot of just randomness sideways for quite some time. So personally, I wouldn't trade it, just because I think there's something better out there that's a bit more obvious. So yeah. Oh yeah, we got Wayne in the chat. Michael, is pro real time down for anyone else? No, it's not down for me. What you can do, Michael, if your pro real time is down, go to help. Or if it's down, then I don't know, mate. Send the email to Pro Real Time. I'm not sure. Let me not talk. The next one I'm going to go on to is Groupon. Groupon was actually the one I took a short on before. I've made a couple videos about this. I was only in one position for the last week or so, and it was in Groupon. I'm going to explain to you why I was in that position and where I exited. And I made a bit of a mistake. I'm still up. I made £300 on that trade, but I could have made more, and it was just down to my itchy fingers why I exited a little bit prematurely. But what I saw in Groupon was that on the weekly chart, it was a falling wedge. Once again, I've got video. If you check my my series, let me show you. I've got a series of videos on all the different chart patterns, and that can explain to you how to take advantage of different chart patterns. So if you check my let me show it to you. If you check my playlist on chart patterns, I actually go through how I take advantage of all the different chart patterns. This is the playlist here. So I've got cup and handle, double bottom, ball and bear flag. I spoke about that with Dollar Tree, and for falling wedge. So this is the one that I'm talking about for this chart right now. Check that video out. I kind of go into a little bit of depth. 6 minute video. It's not too long. I explain to you how I take advantage of falling wedges and ascending wedges. So this is a falling wedge. So when price got to here, I was in two minds. I was like, is it going to break out or is it going to sell off? Because falling wedges are all about going up, down, up, down, up, down, and eventually breaking out. Now, with this falling wedge, when it got to here, I thought it was going to sell off. The reason behind that was, if you go down to the daily chart, here was a triangle pattern, and the shape of this triangle pattern, or potentially a pennant, depends on how you look at it, is that the way it enters is normally how it's going to exit. So it was bearish, so it sold off into this triangle pattern, made kind of a level resistance. So it was like a parallel resistance, but higher lows on the support. And each time it was just getting closer and closer to like a converging point. I knew that at this point here, it was potentially going to break out to the bottom. But I don't prematurely enter trades. I like to wait for some of it to play out first. So I wanted it to break out of here, retrace back to the resistance as a new support, well, the support as a new resistance, then sell off some more. And when it did that, at that point is where I was going to enter, and that's exactly what it did. So I had it in my mind that I was going to short it. I was going to short it down to this green area. That's why I made this green area. It fell a little bit short of that, but at the end of the day, I actually took my profits a bit early. I put £10 per pip, and I took my profits, I think, at 233, and I made about £300. So I think you could do the maths. I got down 30 pips. So 233 to I went from 233 to 263. So I made a decent amount, but look at how much I could have made. I could have made all of that, but I entered, because of my cautionary way of trading it, I entered quite late in the move and exited quite early in the move. But I still made £300, and I can't really complain. But that's one of the things I've been working on, to try and, my entries I have no issue with, but trying to exit at the right time. I entered at 233 only because I haven't really got a good reason, to be honest. I don't know why I entered at 233, because I knew there was more for it to go. I think probably what happened was that it went down to it went down to about here, 235, came back up, went down to here, 220, and it came back up, and I thought maybe this was like the end of the road. But in reality, there was more for it to sell off. If I'd held my nerve at 233, I could have potentially made about 10 more pips, which is £100 more. So I could have made 400 instead of 300. But a profit's a profit at the end of the day, and the fact that I could perfectly identify this trade, and at the end of the day, it didn't go all the way down to the resistance line. It might actually go up and sell off some more, but I'm just gonna see how this plays out, because I do believe there's another trade to be made with Groupon, because eventually I think it's gonna break out of the upside of this, and more money needs to be made when it starts rallying up to the resistance line once again. So I could potentially take another long position on the long side and just ride it out to the resistance line and see if it breaks out or sells off again to repeat the motion once again. But either way, the big move to be made is probably when it breaks out the upside, or when it starts climbing towards the resistance line, because once again, we're all about having good risk reward ratio. If I enter a long position here, I'd only be risking this, which is 23, to make a potential 50, which is 2 to 1, about 3 to 1, which is good. So as much as being right is important, you want to be right and entering at the right time as well, because there's no point entering a short around here as opposed to entering around here. You want to enter at a place where what you're risking is less than what you have potential to gain. So that's why I took the Groupon short, and I made a little bit of profit off that. I'm sure if you guys saw my previous videos on Groupon, you know you followed me through the process, because I spoke about it in these videos here. So yeah, I was up £200 of Groupon in this video, and one good short. So that was the one week ago. One good short. I was talking about Groupon here. So if you watch those videos back, you can see explain it in further depth what I was thinking at each stage of my short position in Groupon. Let me see if you guys have any ones that you're suggesting. Oh, nice one, William. You went short on Dollar Tree as well. Oh, that's great. Did you go short on it because you saw a video, or yeah, Dollar Tree looked like a good short trade, to be honest. See a sell-off at IMT. Okay, IMT. I'm gonna check IMT as well. If you guys if any of you have any other charts you guys are looking at. Okay, so I'm looking at, once again, I'm looking at NIO. NIO, I spoke about it in my last video, but I'm going to speak about it again quickly. NIO looks like it's going to sell off. At first, I thought it was going to break out, but right now, it's looking to me like a sell-off. Mainly, so look to me like a short. Mainly because there's two scenarios. These are the two scenarios that I was accounting for. So you always account for all the different potential scenarios and just wait for one of them to play out. If I preemptively took a long position here, I would have been caught with my pants down, because it actually sold off. So that's why you map out what the different scenarios are and wait for one of them to play out. Now I think it's going to sell off, mainly because there's lots of bad news around NIO. I spoke about it in my last video. Once again, check that out. Did a full analysis on NIO, but there's been lots of bad news about cash flow issues with NIO, so doesn't sound too good for them. and they've also been pushing back their earnings reports, which is a bad sign as well. So this doesn't look as likely to me anymore, and it looks like it's going to sell off. What I'm waiting for now, actually the alert that I got earlier in this video was actually this line being broken, because I set an alert on this line because I wanted to see when price broke this line. I wanted to know, and it did it while I was making this video. So what that means is that it looks like it could be selling off, because this line has been held. If you go to the 1 hour chart, it's been held, look, here. It's been broken, it's been retraced back to, now I think it's going to continue selling off. So this could be a good short as well with NIO. Unfortunately, you can't sell short NIO on IG, so I think if I was to short it, I'll probably have to use eToro or something like that. But this looks like a good short as well, because I can see price selling off here, primarily as well because it's a ascending wedge. Now let me I think I've got a drawing of you of the ascending wedge as well. Let me show it to you. Yeah, there it is. Looks a bit like this, doesn't it? If you can look at the pattern of that. And it's also important how it came into that ascending wedge position. It came from the upside, so it's sold off into the ascending wedge. So let me show you again. Can you see the pattern? So once you start identifying these patterns, it's easy to identify where this is going to go next. I believe it's going to sell off. It's going to sell off quite frantically. It's going to sell off with almost like the aggressiveness that it came down here. So what I think next is going to happen is going to be something like this. The way I kind of guess how fast and how much it's going to go down, I'll do a little ruler tool, then I move it. So I copy it and I go like that, and then I delete that. So what that shows me is how far it's going to go. So it's going to go, I think it's going to go around to this area here. This is like my profit zone. I like to just make a little green box for my profit zone. So yeah, and I'll just delete that. So that's where I think if I was to short it, that's where I'll take it to. And then even if I don't short it, I'll leave this box there so I can see how price moved, and if I was right in my hypothesis. Yeah. So I'm gonna go on to someone mentioned IMT. Let me check out IMT. Oh, my profit, Kenny. My profit was 300 quid. I made 300 quid on Groupon. But yeah, I made 300 quid on that. Wayne LNN. Okay, I'm gonna go in. I'm gonna look at IMT first. Someone mentioned IMT. Yeah, well, it does look like a descending wedge. Where's IMT? Who mentioned IMT? Did they delete it? Am I blind? Where's IMT? Okay, I guess no one wants to see. Okay, Will said IMT. Okay, so let me look at IMT. Imperial Brands. Oh yeah, I've been hearing a lot about them. This is because of a lot of the news coming out about them, isn't it? More the fundamentals. So I've got some lines. This is kind of like a weak wedge. It's kind of like a wedge, but it's kind of weak because it's not really touching all the lines I want it to. The way I'd play this is that I would set an alert on this line here, and I'll just wait for it to break out, because right now we've missed most of this move, and I don't like chasing trades. I like to be like entering a trade in the early stages. So what I would do is that I would be waiting for a potential breakout. So I want it to do something like this. So what I'd do is that I'd wait for it to break out, and once it broke out, I might take a position, and then when it maybe take half a position on a long position, then when it ricocheted back off the old resistance as a new support, take the other half position here and let it climb up. This is exactly what I should have done for this company, but for this one, but I'd made a little bit of money, but I didn't make the money I should have made, because this was a falling wedge as well, and I took a long position here, and when it started selling off, I exited my position and I made a little bit back here, but I should have held it, because then in the long run it would have been like, I made like a small amount, I can't remember what I made, but this was like, could have made like 1,000 pips instead of something like 200 or 300. So yeah, but once you see a falling wedge, you should be able to know how to take advantage of it, but it's not always going to move the way you want it to. It's not going to be a smooth transition. It's not just going to go up What am I doing? It's not always just going to go textbook up, down, up. It might give you a little bit of craziness along the way, but as long as you have a strong risk to reward ratio and you didn't put too much money on it, you should be able to ride out and see most of the benefits as it climbs up as well. Wayne, what's up, Wayne? Wayne, how you doing? Okay, LNN. Let me check that out. Actually, before I check out LNN, I want to check out Hargreaves. Hargreaves Lansdowne. Hargreaves. This one looks a bit messy, but I think there's some potential gains to be made here. There's a couple stocks, especially in the UK market, that I noticed made a lot of a big climb after the elections, then spent the next couple of days just selling off slowly. And now that they've found a happy medium, they've sold off to basically where it climbed before, and now it looks like it's going to make a second wave up. So I'm seeing a lot of this going on, especially in the UK stocks, going a shoot up after the elections, a gradual come back down to where it shot up from, and now I think it's going to start climbing again. So this is the area that we can make some profit off of, because if we miss that one, we can enter again here and then go long. So this is what I'm seeing happen with Hargreaves. If you go down to like the 2-hour chart, I drew a couple lines and it looks like kind of like an expanding wedge here. And what I saw here was that price it was going up here, broke out, and it's kind of consolidated here. And this would be a great place to take a long position, because you could take a long position, set your stop loss around here, and then look, you're not really risking too much. So once again, I keep going on about this risk to reward ratio, very important, because it means that you could be wrong several times, and when you're right, you can make a big profit, and it will just disqualify all the losses that you made because they were small losses. If you look at this, let me use the ruler tool. So if you're risking about 40 pips to potentially make, even if it just goes back to what it was here, to make 180 pips. So that's 4, 8, 12, 16. So that's like 4 to 1, 5 to 1. So that's like 4.5 to 1 risk to reward, which is really good. Once again, 4 to 1, 5 to 1. Those are great risk to reward ratios. So this would be a great place to go long. I'm also looking at ITV as well. ITV is another one that is basically in the exact same position as Hargreaves Lansdowne. Shot up during the elections, sold off, kissed previous resistance as a support, and now it looks like it's about to climb back up again. Once again, you can just take advantage of the next bullish move. And if you look at the wider range, it looks like it's just been doing this for some time. And once again, I've been saying ITV is one to watch for this year. I think it's going to just go to the moon this year. They have a lot of great stuff coming this year. So this is one, forget about trading. This one could be potential investment. What's up, Euphoria? What's up? How you doing? Yeah, so ITV and Hargreaves, two of the UK stocks, but I'd advise all of you guys to just go and look. Yo, Infant, I didn't even see your message. What's up, Infant? How you doing? eToro, I see you're trading as well. You're a trader now. Okay. Yeah, I like to see. There's a lot of UK stocks. These are for the investors as well. One for Infant as well. You can probably make a video about this as well. There's a lot of UK stocks right now that have skyrocketed after the election, sold back off, and are now curving back up to regain the gains that they made post-election that they sold off with. So if you can find a lot of other FTSE 100 stocks, or even FTSE 250 stocks that are showing the same pattern ITV and Hargreaves did, then you can make a little bit of profit, even if it's just a trade just back to the previous high here. Yeah, so that's how you can make a little bit of money. Even if you don't want to hold it long term, you can just make some money off of just the move from here to here. You can't be precious when it comes to trading. Just take the profits that they give you here. Even if it's just up to the previous support, that's like 8% you can make. That's more than you can make in a year with your money in the bank. So just find those quick little wins here and there. Okay, Wayne, back to your LNN. I didn't forget about you. This video is nearly 30 minutes. LNN. Okay. LNN. Lindsay Corp. Am I right? Okay, so LNN. Straight away, what I see. What do you guys see? Let me know what do you guys see here. There's a bit of a time lag in it, so if I say this, it's going to take a while for you to respond. I'm just going to do it. To me, straight away, I see some sort of like, it's either a channel pattern or expanding wedge. So I see that. So yeah, that's the first thing I see straight away. And look at this, just stay true to it over here and over here. So and the 180 days below price. So straight away, there's a potential here. A bit wary because the MACD is overbought, so it could potentially start selling off. So the trade could be a short, or maybe it's going to break out. Always account for every eventuality. I always say that. Always account for every eventuality. So those are the two plays. Now I'm not going to preempt it. What I would do. This is not something I would potentially trade because I think there's better ones out there. But I'd set an alert on this line and just wait it out. Just see what happens. Set an alert on this line. Well, I didn't do it. Set an alert on this line. Yeah, exactly. Horizontal channel. Nice one, Wayne. Yeah, you know it. And I'd wait for it to sell off or wait for it to break out. And then once it does that, I can kind of see how I could take advantage of this trade. But yeah, I wouldn't preempt anything. The only thing I'd look at, I'd give me a little bit of cause, not concern. Well, it's not cause for concern because if it's overbought, then it could sell off, and then it's a short position. Just look at this. The MACD's, the RSI is overbought, and the MACD looks quite high. So maybe it could sell off again. So that could be a potential short. So that's how you could play that. Yeah. Ihab wants me to go through the DAX. Okay. DAX is. I'll go through DAX, and this is the last one. DAX is the last one. DAX is the last one. So DAX is nearing all-time highs. I think it's probably going to break all-time highs soon. My thought process behind that is that I think it's going to break all-time highs soon. The reason why is that we're in a globalized market. Whenever the US catches a cold, Europe sneezes, or something of that effect. I think that's the saying. And right now, the US shares are at all-time highs. Look at that, all-time highs. UK, we are even approaching all-time highs. We're trying to catch up with the rest of Europe. Because of all the Brexit stuff, we were behind everyone, but we're catching up. So I even think this is probably a better trade to make because there's more room to catch up with. So if you want to go long on the index, I say the FTSE is the one to take a long position with. The reason why I'm not in it right now is because, as I said, I like to catch things early. I like to catch things on the reversal. I'd rather be here and going long rather than here, because I get a little bit jittery because I don't like to be like halfway through a move and catching the wave, because that's probably a shortcoming of mine, but I just like to catch it really near where the reversal is so that my stop loss can be quite tight and then I can just ride it all the way, rather than catching it halfway through and then not really knowing where my stop loss should be, and any sort of retracement that occurs I start getting scared and I exit my position. So that's why I probably wouldn't take a long here, even though I think it's going to just break through the all-time high. But that's just a longer way of saying I think DAX is gonna break the all-time high after the new year. I don't think it will do it now because I think the next couple of days there's always a bit of a limbo period between like Boxing Day and Christmas where not much really happens. So I wouldn't really take a trade on DAX there. I'll wait for the new year. I might be wrong, so don't come to me. I might be wrong, but I'm not. I just don't like seeing patterns like this where it's just a lot of sideways movement, because there's nothing really, there's no way of really like doing much technical analysis on it. Because if you go down to the hour chart, it's like, how do I really analyze this? There's a whole lot of nothing, a whole lot of sideways movement. That's what I hate to see. So I'd say just leave it out for now and just find something a bit more clear cut. Yeah, with regards to shares. But yeah, right now I'm in Dollar Tree, shorting that. Hopefully make me some money into the January period. Yeah, but that's me. Guys, give it a like, give it a subscribe, all that crap. You probably subscribed anyway if you're watching this video, but yeah, I've got my premium group coming soon. I'm thinking of making a course. I'm still testing the waters to see if I should make a course, because there's a lot of courses out there, and I don't know if there's much demand for another course out there that's going to be teaching a lot of the same stuff. But I've got a specific way I do things. I think the way I do things is quite measured as opposed to a lot of these other traders out there, and mainly because I'm a swing trader, I'm not a day trader. But maybe I'll create a course. I want to test the waters and see what people are saying. But this premium group's going to be out in January, and it's going to be much more of what you're seeing here. Live streams, frequent live streams. I'm going to be giving people my live positions. I'm obviously giving you my live positions now, but I'm going to probably stop doing that so much on the main channel and just telling people about my positions after I take them. So but you'll get more information on Discord group about the premium group. It's not going to be arm and a leg. It's going to be pretty cheap, and it's going to be subscription based, so you can opt out at any time. But I'll provide more information then, and just see what sort of demand there is. If you want to join, let me know. I'm not going to do no hard selling, no pushing, so I'll let guys know about it. But if you want to join, it's up to you to kind of come to me, because I really don't want my channel to be about the same way a lot of these other channels are about, where it's just upselling products. I still want to be there to be some sort of value that you're gaining from it. But yeah, I've rambled on for 36 minutes. It's aka the Noctrader signing out.